How's it going, everyone? Welcome to another episode of Investing Kev. This is the 8th episode of this YouTube channel, which is crazy to think about. Thank you, everyone who has joined me on this journey, whether it's tuning into my videos, liking them, subscribing, or leaving a comment. I greatly appreciate all of it. In this episode, we'll be taking a look at SoFi, ticker SOFI. I personally did not know much about this company at all, except that its name is on the Los Angeles Rams and Los Angeles Chargers Stadium, so I am new to this. We'll take a look at the company overview, the financials, outlook, risk factors, price target, and final thoughts. For full disclosure, I currently do not own any shares of SoFi in any of my portfolios. Before we take a look at SoFi, I want to give a quick update on my strategies portfolio. If you're new, I have 4 different investing strategies and I'm distributing equal payments into every portfolio every 2 weeks. I am dollar cost averaging and seeing how each investing style performs over time. If you see at the top right corner, I currently have $1.56 in my cash balance. At the end of June, I received my first ever dividend for the strategies portfolio. Inside the dividend portfolio, we received 36 cents from Pepsi. It's not much, but any additional income to help purchase more fractional shares is always welcomed. A few days later, I received $1.20 from the S&P 500 portfolio from the ETF. As of June 1st, when the strategies portfolio was started, the growth portfolio is currently leading the way, beating out the balanced S&P and dividend portfolio with a 7.2% in gains. The S&P 500 is currently in second place, the balanced portfolio is in third, and currently my dividends portfolio is in the negative. Any dividends earned will be reinvested back into the specific portfolio which the stock or ETF resides in. And as always, feel free to follow along with my investing journey. The spreadsheet link is in the description below. You have full transparency of the strategies portfolio as a dollar cost average over time alongside watch lists and breakdowns. With the watch list, you can view a lot of growth stocks and see how they've performed since June 1st. You can see their 52-week low and high, their current EPS, and their current PE ratio. The same thing applies for the dividend watch list, except you get more information, such as the current dividend and the current dividend yield, alongside the current dividend payout ratio. And if you're interested in learning about Teladoc, you can check out the video after this and you can see a typed out summary of it on my spreadsheet. Teladoc is my most popular video so far on this channel, and it is definitely an intriguing stock in the rising telehealth industry. Alright, let's check out SoFi. SoFi was founded in 2011 and is a one-stop shop digital banking platform targeting the younger generation. SoFi is a neobank, meaning it's not a traditional brick-and-mortar bank that we're used to. It's exclusively online, and the foundation of the company is to allow customers to borrow, save, spend, and invest within a single application. Quite often, people have multiple accounts with different banks and brokerages for investing in stocks or crypto or applying for student, house, and personal loans. SoFi consolidates all of that within their ecosystem, allowing users to easily manage their finances. As you can see, you can invest, apply for personal loans, refinance your student loans, apply for their credit card and earn cash back. You can use them for insurance, and also you can refinance your auto loans. SoFi currently has over 2 million members. These members can use their earned points, which can be redeemed for cash, used to purchase fractional shares of stock, pay off their SoFi loan payments, and many more. They focus on strong customer service, offering help whenever you need it. And SoFi members get complimentary benefits like financial planning and exclusive access to SoFi Stadium. SoFi states that your money works better when it's all in one app. They currently have over $100 million saved in vaults. They have over $22 billion in debt paid off, and they have over $59 billion in funded loans. As you can see from their mobile user interface, you have access of tracking your usage, your investments, your loans, and credit score all in one place. SoFi has 3 segments that make up the business. They have their lending branch, where people can refinance or apply for loans. This ranges from personal loans, home loans, in-school loans, or student loan refinancing. The second segment is their technology platform, where they acquired Galileo, which we'll talk about in just a bit. They also own 1/6 of Apex Clearing, which is the digital wealth management institution that supports brokerages such as Robinhood, M1 Finance, and Webull. They handle buy and sell orders and also maintain the custody of account owners' securities and other assets. And the final segment is the financial services. This is where you can invest in stocks, where you can use a savings account, you can use their SoFi credit card, you can use SoFi Lantern, which helps hundreds of thousands of people compare rates and find the right financial products. You can use SoFi Relay, which is their budget tracking and debt payoff planner. And last, you can use SoFi Protect, which is life insurance and other forms of insurance. Taking a quick look at SoFi Money, It's a cash management account that earns interest and has no account fees. A few cool things about this account is that you can get your paychecks up to 2 days early if you enroll in direct deposit. You can earn 0.25% APY, which is 6 times the national average, and you have no overdraft coverage fees. You also get a $100 welcome bonus. There are some disclaimers for each point, so I would highly encourage you to read the fine print if you're interested in opening a SoFi account. With the SoFi credit card, you will get unlimited 2% cash back. As said before, you can use that cash back to save, invest, or pay down an eligible SoFi loan. There is also no annual fee when it comes to this credit card. And the SoFi credit card is the first credit card that lets you cash in on crypto. With the SoFi Invest, you get all-in-one investing, where you can trade stocks, ETFs, crypto, and participate in IPOs at IPO prices. I personally think the IPO participation is really fascinating because there's been a few IPOs I can think of within the past year that skyrocketed when it opened for trading. For example, back in December 2020, Airbnb had an IPO pricing of $68 per share, but when it opened for trading to the public, it was priced at $146 per share for a 114.7% increase. With SoFi investing, people would have had the chance to buy Airbnb at $68 instead of the $146 per share. Another example is back in September 2020 when Snowflake's original IPO price was $120 per share before being open for trading. The article says, but demand was so strong that shares finally wound up opening early Wednesday afternoon at $245 a share and quickly climbed above $300 for a 150% gain. SoFi users would have had the chance to purchase Snowflake at $120 or Airbnb at $68 before being open for trading. Back in April 2020, SoFi acquired Galileo, which is a global payments platform that powers the world's leading fintech, financial services, and investment firms. Their API, or application programming interface, power functionalities include account setup, funding, direct deposit, ACH transfer, IVR, early paycheck direct deposit, bill pay, transaction notifications, check balance, and point-of-sale authorization, as well as dozens of other capabilities. Taking a look at the financials of SoFi, there are some really great things about this company. At the end of 2021, they're expecting net revenues of $980 million. By the end of 2025, they're predicting $3.6 billion US. Within the 5-year time frame of 2020 to 2025, they're expecting an annual compound growth rate of 43%. Their lending segment during that time will have a 25% compound annual growth rate. Their technology segment via Galileo and Apex Clearing is 55%, and their financial services segment is expected to see a 153% compound annual growth rate. In 2020, the financial services made up $11 million in revenue, but come 2025, it will be a $1.1 billion segment of theirs. By 2025, they'll be much more diversified, reducing their 82% dependence on lending to just 43% in 2025, with their tech platform growing from 17% to 25%, and their financial services going from just 2% to a whopping 32% of their entire business. And SoFi projects if they're able to get approved for a bank charter and manage their own bank, they're expecting an additional $300 million added onto their end of 2025 adjusted EBITDA margins. The trends are looking really nice for SoFi as their revenues are going up and their EBITDA without the bank charter is trending up. The bank charter will help accelerate their growth and help with their profitability. In their tech segment, Galileo has seen 6 quarters of accelerating growth in total accounts going from 21 million in Q3 of 2019 to 50 million in Q3 of 2020. When I look at the future prospects of SoFi, there are a few things that stand out. The biggest one is that they are a one-stop shop. Looking at the survey, 80% of consumers cite inadequate one-stop shops as the reason for multiple accounts. SoFi is the only company providing this solution in one single application. Looking at this timeline, this is a testament to the management and team at SoFi. Within 24 months, they released their entire ecosystem, allowing that financial relationship to be consolidated into a single app, making it easier for their users to take control of their finances. As a result, they're increasing their members. By the end of 2021, they're expecting 3 million users, which is up 75% after 6 consecutive quarters of accelerating year-over-year growth. The amount of members using their total products will go from 2.3 million people to 4 million, which is 77% year-over-year growth. And the amount of multi-product members will go from 400,000 people to 775,000 people, which is a 95% year-over-year growth. Management is led by a group of people with a wealth of experience from different sectors. You have CEO Anthony Noto, who worked at Twitter, NFL, and Goldman Sachs. You have people from Amazon, Microsoft, Uber, Tesla, Toyota, Sallie Mae, and JP Morgan Chase. This looks like a very experienced group, and the product reflects that in my opinion. Marketing is another key factor. I want to share a few clips from the CNBC interview with the CEO of SoFi about the stadium naming rights.
So let's talk about this SoFi announcement. What went into the process and the idea of putting SoFi's name on an NFL stadium?
We saw it as a real opportunity now that we have a complete suite of financial services. SoFi Money for those that want to save, spend, and earn. SoFi Invest for those that want to buy stocks and ETFs, as well as those that need to borrow money to buy a home or to pay for college. We have to build awareness of those products, which requires us also building trust. And so being part of this iconic destination allows us to really elevate and accelerate how quickly we can get there.
This is really coming full circle for you. You were CFO of the NFL. How big was that in the decision to actually go after a stadium and put your name on it?
Yeah, I'm very fortunate that I had a front row seat to many of the other stadiums that have been built and the partnerships the NFL has struck, not just with the stadiums, but more broadly. We think of this as a destination. It's iconic in nature. So it will not just be an on-location type of awareness, but it'll also be a national broadcast vehicle for the National Football League and so many other marquee events. And I've seen that really benefit a number of other companies over the last 2 decades. So it was an opportunity to be part of that similar type of process and get the benefits from something that's not just going to be a destination for the NFL, but for sports more broadly and also live entertainment.
Anthony Noto goes on to say that they spend a lot on marketing and that this stadium marketing cost is less than 10% of their overall marketing budget. He says that SoFi Stadium will be hosting the college football championships, Super Bowl, concerts, Olympics, and World Cup, so they're primed to reach a massive global audience as their name will be broadcasted worldwide. When I look at potential risk factors, the biggest one is competition. Even though SoFi is a one-stop shop, that doesn't mean that their products will reach out to everyone. For example, if one were to use SoFi Invest to trade crypto, there may be some coins that are not offered on SoFi Invest that competitors such as Coinbase or Robinhood may have. When it comes to lending, other digital bank platforms may offer better rates when it comes to loans or better refinancing options. Other companies, whether legacy companies or new companies, may offer a one-stop shop for the product lineup down the road, and that can definitely hurt SoFi's market share. SoFi will need to continue to market the products, offer better technology and user experience to fend off as many competitors as possible. With increasing competition comes subscribers. They may not be able to retain their users or grow their users as much as they want. That can definitely hurt their revenues down the road, and that may drive SoFi to spend even more money on marketing, thus hurting their profitability margins. I want to show you this image. Sorry for the blurriness, but this is from SoFi's presentation during their SPAC merger. As you can see, there are so many options out there. It is overwhelming and it is siloed. A lot of people are already using these companies' products, so SoFi will have to make it compelling for people to break away from their siloed choices and to go to an all-in-one shop. SoFi will have to compete against Rocket Mortgage for loans and credit. They will have to compete against Robinhood for investing and retirement. They will have to go against Betterment in wealth management, and they will have to go against NerdWallet when it comes to financial education, as well as MoneyGram, PayPal, Venmo, Zelle, and Western Union when it comes to payments. I want to take a look at the price target value of SoFi. I checked both CNN and TipRanks, and they used the same 2 Wall Street analysts for their predictions. The average 12-month price target is $27.50, which is a 52% upside from its current price of $18.08 when it closed on Friday, July 2nd. The high is $30 and the low is $25. I really like the future prospects of SoFi. They're growing their memberships, they're growing their revenues, and most importantly, right now they're meeting the customers' needs. Consolidating everything into a single platform is huge, allowing people to break away from their X number of apps and consolidating it into a single place. Their management seems strong. The product lineup covers pretty much the entire financial offerings from investing to saving to loans and refinancing. I think they're doing a great job of branding and making them stand out against a very competitive fintech industry. Their reviews for their different products is solid, and that is helping them create a stronger moat. I will not be adding SoFi into my strategies portfolio because I need to track these stocks as is over the course of a year, but in my personal portfolio, I am very intrigued. I don't know if I'll be buying, but it is definitely up there on my watch list. Thank you everyone for tuning in. I hope that you learned something today about SoFi. If you liked this video, please like it for the YouTube algorithm and consider subscribing. Stay safe, and I will see you all next time.